Hey everyone, welcome back to my channel. In today's video, we'll be discussing the recent news of Silicon Valley Bank, SVB, going out of business. We'll be breaking down the key takeaways from the recent collapse of Silicon Valley Bank and why it has investors and savers alike worried about the stability of the US finance industry. So sit tight and get ready to learn how this could impact your investments and the wider economy. First, who is Silicon Valley Bank? Silicon Valley Bank, better known as SVB, is a financial partner that helps individuals, investors, and innovative companies achieve their goals. Established in 1983, SVB has been a leader in the innovation economy for nearly 40 years. SVB has expanded globally, with offices in 15 states, Israel, Ireland, Germany, Canada, and Denmark. The company offers a range of services, including commercial and investment banking, wealth planning, and day-to-day banking services through SVB Go. SVB is committed to providing $5 billion in sustainable finance and achieving carbon-neutral operations by 2025. The company has won several awards, including being a member of the Bloomberg Gender Equality Index, Forbes' Best Banks in America, and America's Most Responsible Companies by Newsweek. Here are the key points from this current situation. SVB was a big lender to new tech companies in the US and had a lot of its assets in its investment portfolio, which included treasuries and other bonds whose value went down when the Federal Reserve raised interest rates to stop inflation. The failure of SVB is a quick setback for the bank, which needs to raise more than $2 billion in new capital. The FDIC has taken over SVB and opened the Deposit Insurance National Bank of Santa Clara, which now holds the insured deposits from SVB. The FDIC has said that insured depositors will be able to get their money by Monday morning at the latest. Standard insurance from the FDIC covers up to $250,000 per depositor, per bank, for each type of account ownership. Short-term, investors should think about putting their money somewhere else if their bank deals with digital assets or holds risky securities. Critics think that the government taking over the bank would be a bailout for the tech and venture capital industries, but others argue that it would save depositors, many of which are small tech businesses. The failure of SVB could be bad for the startup ecosystem, as entrepreneurs are worried that the money they have will run out quickly, forcing thousands of startups to lay off workers or close down. Many tech startups that have raised more than $60 million from investors are in a scary state of limbo. The biggest U.S. bank failure since the global financial crisis more than a decade ago was caused by the failure of SVB, a major player in the tech and venture capital worlds. Experts say that the stock market may take a hit in the short term, but they don't think there will be another crisis like the one in 2008. The biggest risk is outside the banks, and the biggest banks are better capitalized and more liquid now than at any time in the last 50 years. That's it for today's video. Let me know your thoughts in the comments below. Don't forget to like and subscribe for more content like this. Thank you for watching.